Hello, this is Dale. In this video, I'm going to discuss how to automate your credit spread trading. Well, not fully automate the trading. It's still going to require you to find a good trade, look to see what credit spread you want to put on, and execute and then exit. But I'm going to talk about some tools that you can use to help you so you don't constantly have to watch this trade. You can pretty much let it go and have your trading platform alert you when it's ready to make a move, either to get in or take a profit or take a loss. Those of you that have been with me for a while know that I only use 3 indicators to find my trades: measured moves, Fibonacci extensions, and the regression channel. Let me go over those quickly. The measured move is very, very important. When you have the price coming down and then it comes up, pulls back a little bit, but makes a higher low, and then makes a higher high. This is the classic definition of an uptrend: higher highs and higher lows. This is a bullish measured move. Once you see a bullish measured move, you've got a pretty good indication that it's going to stay in that trend for a while. That doesn't work all the time. You're going to have some losing trades. You're going to have some losing streaks. But this is one of the best tools. Actually, the 3 that I use are the 3 best tools that I've found in my greater than 4 decades of trading. On the bearish side, when you have the price coming up and it drops, then it comes back up, it makes a lower high and then a lower low. This is the classic definition of a downtrend. Once you have these measured moves, you can put on Fibonacci extensions to kind of project when that trade might be overextended. Now, the Fibonacci's were derived by Fibonacci using a number sequence, but basically all you need to know is the root Fibonacci ratio is you can take any number and divide it by the number right after that in the sequence, and you're going to come up with 0.61. Of course, the mathematicians have gone with the square and the square root, and then they look at the reciprocal. Well, this is the one that I use, the 0.127 for extension to show me that, yeah, this is maybe a good time to take profits. Then, of course, we have the regression channel, where 95% of all prices will be contained within the +2 and the -2 standard deviation around the regression line. These 3 tools are going to really help you decide, excuse me, when's a good time to get into a trade. Of course, we've got a number of advantages when we use vertical credit spreads. It's a very, very conservative trade. Gives you great returns with a high probability of success. It yields monthly income. I'm going to show you my equity curve towards the end, and you'll see that month after month we make profits with this. It's a conservative trading strategy. You're giving what the market is going to give you, and that's it. This is not, we're going after home runs. We're going after consistent profits month after month, year after year. We are sellers of premium, so time is in our favor. Time value is in our favor. You don't have to constantly watch the market. Beauty of credit spreads is, I usually watch the market in the morning when it first opens up, towards the end, and then maybe one time during the day I'll check in. But if you've got a credit spread on, it's not gonna It's not going to get you in trouble quickly or make a profit quickly. You don't really have to watch it all the time. Therefore, it's a low anxiety trade. Of course, we have protection against loss because of the credit spread. You're selling an option out of the money and then buying one further out of the money for protection. The nice thing about credit spreads is it's just the conservative trade, and I love that. I love that. You know, if you're looking at a straight put or a straight call, it has to go in that direction quickly for you to make money. Yeah, it happens sometimes, but with a credit spread, there's 3 out of 4 ways you can win. If it goes sideways, first of all, the credit spread is up here. This is particular credit spread is a bear call, where we're selling this option and buying one further out of the money. So you can see that right off the bat, it's a conservative trade. We're feeling that it's going to go down. So if it does go down, we are going to profit. If it goes sideways, we're going to profit. If it goes slightly against us, we're going to profit. The only time we're going to lose is when it goes up into this area relatively soon. And, you know, when I put out my trades, I will put out an alert to exit well before something like this happens. We also never take it all the way till expiration. So let's talk about how you can automate your trades. The first thing is you want to prepare for a measured move. All right, so do we see anything on this chart that looks like a measured move? Well, you can see that first of all, the +1 and the +2 on the regression channel are sloping down. You can see that the stock price, and this is the stock price for the RUT, the Russell 2000, is going down, okay? But then it starts to get a little traction and starts moving up, okay? But even at this point, it is a lower high. So when it makes a lower low here, that's the time you're going to want to get into the trade. So you just have to look at the chart and prepare yourself for when you're going to have a possible measured move. Now, the nice thing about Thinkorswim, I'm not affiliated with them. I think they're a great trading platform. I think a lot of trading platforms will allow you to create an alert. When I see a measured move happening, I want to know when it gets down to this point, then I know I've got a measured move. And I create an alert there. It tells my computer will go bing, bing, bing. I get an email, I get a text. So I can go into the trading platform, look at it and say, yep, sure enough, I've got a measured move, and set up my trade. Step 3 is I want to go ahead and exit the trade, or excuse me, execute the trade. And what we're looking at here is the option chain for the RUT going out 40 days. And what we want to do is we're going to look for a delta right around 0.24. In layman's terms, that means it's going to expire worthless about 75 to 80% of the time. Okay. And I want to go 10 points apart. So this is the one I sell. This is the one I buy. Okay. Very easy. I'm looking for 0.2 delta. That's the one I sell. 10 points apart. That's the one I buy. This particular one I was looking at was a bear call. So I'm on the call side. This is the put side. I'm on the call side and I'm selling the 2100 and buying the 2110. Step 4, once I have a measured move, I can go ahead and draw the 127 Fibonacci, which creates an alert right here at this point. and that is around 1853. So first of all, it has come down, and I thought it was going to make a measured move. I put in to create an alert right here. Sure enough, it did. It made a measured move right there. Okay. As soon as I get a measured move, I can come in and draw Fibonacci's by taking the Fibonacci trading tool, going from the top of this wick to the bottom of this wick, okay, and then back up, and this is a lower high, and then we had a lower low right here. Ding, ding, ding. Okay, that's the measured move. Once I have that, I can draw the Fibonacci, which is telling me this is a good trade to the downside. But if it gets down around here, it might be a little overextended. You might think about taking profits. We put an alert down here. As soon as I can draw that Fibonacci, I want to put an alert at that point. Step 5, I want to exit with a loss if I get a measured move against the trade, and that would be right at this point here. So I can come in and create an alert. If it goes above 2060, I want to be told by the alert, text, email, bells and whistles, that it's time to look at your trade and possibly exit. All right. So I created an alert to get in. I created an alert to get out, to take a profit, and I created an alert to get out, taking a loss. This is my trade. In, out. Soon as I get in, I know when I'm going to get out. There's no anxiety about really watching this. If you've got it automated like this, you know exactly, and you're going to have an alert tell you that it's time possibly to take some profits, or it's time to get out and take a loss. Now, this was an actual trade we did back in April 22nd of this year. We put on a bear call, and we put it on right here, and that was April 22nd. And what we did is we sold the May 2100 call, and then we buy one 10 points further out of the money. Okay. And so we're selling this, we're buying this, we get a net credit of $2.70. You say, well, why not just sell this guy right here? Because you have to have a very high level of trading experience. The brokers are going to require a very high margin, and you can actually get a better return on margin by putting on a safety net. Okay. Now, we're not going to take it all the way to expiration. We've got this all the way for a month and a couple days, and we put it on right here, and 1, 2, 3, 4, 5, 6, 7 days, we're out. We're out, and we're buying back that bear call. We're buying the 2100 call and now selling the 2110 call for a net debit of $1. So we brought in 270. We're buying it back for $1. We have $1.70 profit, or $170 for one contract. 10 contracts, again, one contract. This is the point that, you know, people that are just starting out learning this have a portfolio of maybe $5,000, $10,000. They're buying one contract. I would suggest that you start low. And I would suggest you not paper trade. You actually trade with real money, because a lot of times with paper trade, you might get a loss and you say, oh, I wouldn't have done that. Well, yes, you did. Yes, you did. So start with a journal. Why did you get in? Why did you get out? You know, go small, start small. But this one contract here on all the RUT that we had for 7 days, paid for multiple months of my membership. Okay, a lot of people trade 10 contracts, and then even some go as high as 50. You can see how profitable this very conservative trade can be. I have to mention that past performance is no guarantee of future results. However, I'm going to show you my equity curve, and I do this month after month after month after month. I've been releasing publicly trading alerts for greater than 11 years. I'm not a registered investment advisor, so I can't tell you this is what you want to do. What I tell you is this is what I am doing. This is what I am doing. If you decide to follow along and do it yourself, that's your decision. This is my equity curve over, well, this is over the last 2.5 years. It looks just like this for the 11 years I've been doing this. You can see that we have a positive equity curve here. There are times when we have losing streaks, and we've got losses. This particular time is very difficult. This was during the Russian Ukraine war. It was a number of strains of coronavirus were coming out, and we've got inflation that the FOMC is raising interest rates. So this has been a particularly volatile time in the market. You see, we've kind of just treaded water, waiting for us to continue on with this equity curve. I'd love you to all become a member, be a mentee of mine. I've been doing this for, like I said, 4 decades. This is how I made my living. To the point in my career where I'm giving back. I know that the stock market, a lot of people have a lot of interest in it, and it can chew you up and spit you out. It is not a nice place to make money unless you know what's going on. I know what's going on, and I teach my people how to do that. Become a member. Just go to www.optionsinfinity.com. As a member, you're going to get my entire master suite. This is how I trade. I'm going to show you how I do credit spreads, how I do stocks, how I do Forex. Then I'm probably the only website out there that's going to release text and email alerts when I'm making a trade, and I show you the position list all the way back in time. You can go back in time and see what trade I made 5 years ago and how it worked out. It's all right there. I'm the only one out there that shows you my profits, my losses. And then every other week we get together and I teach you a webinar, about an hour. We talk about the current trades, the current market situation. Plenty of time for my mentees to ask questions, to really get grounded on this strategy and to understand what's going on. So I hope you all take advantage of me and become a member at www.optionsinfinity.com. And I hope to see you in the room. Bye-bye now.